Welcome back to Talk Stocks with me. Last week's market and economic picture gave us plenty to unpack. On the economic front, the December jobs report surprised to the upside with 256,000 jobs added, unemployment ticking down to 4.1%, and wages growing 3.9% year over year. A tight labor market was further confirmed by a drop in weekly jobless claims. Meanwhile, the Federal Reserve's meeting minutes hinted at their focus on labor market strengths as they navigate future rate decisions. On the market side, while bearish sentiment dominates the US indices, Nigeria continues its bullish momentum. Oil shows short term strength, and Bitcoin offers mid term optimism. Let's dive into the details to understand what it all means for your portfolio. Before I get into this video, I would like to give a quick disclaimer. I am not a financial advisor. The content of my video represents my personal opinions and is provided for informational, educational, and entertainment purposes only. This information is not intended to be legal, financial, or an investment advice. As always, conduct your own research and due diligence before making any financial decisions. Remember, it's your money. Make informed decisions that are right for you. I'll never ask you for money, nor will I provide my phone number or personal email address. If you encounter any suspicious accounts or messages claiming to be me, please report them immediately as fake or scam accounts. Let's begin today's technical class on the large cap stock ETF VOO to inspect for signs of reversal and to highlight the key regions to watch out for this week. Let's get started. On the trading view charting tool, I have the daily price action for VOO started from January 2022 to the current time frame, to the current timeline, or to the current date, or to the last trading date. And what I've also highlighted on this chart is this famous chart pattern called the cup and handle. Typically, the cup and handle pattern is a bullish pattern, and typically people expect from the break of the cup handle, you expect a similar run up or momentum equivalent to the depth of the cup. So how deep the cup is in terms of height translates to the expected return once this once this handle, once there is a breakout from the handle, and this is the breakout from the handle around here. And you can clearly see that the depth of this cup is around 22.75, and the stock, this ETF, actually rallied that high. In fact, it even went higher by a little bit more, so maybe 25%. And by default, you expect that once that run up has been achieved, you expect there to be some form of pullback or correction, which is what we've been experiencing since December. And if you remember correctly, if I pan towards the more recent time frame, you can clearly see that the reversal has started, or the pullback, whichever term you want to use to describe what is happening. And in my previous videos, I've highlighted the occurrence of a head and shoulder pattern. This is the left shoulder, this is the head, and this is the right shoulder. Let's try to enlarge it more. Good. Now, within this pattern, what we have always been trying, or what we've been patiently waiting for, is to see if the candle is going to negate this bearish pattern, or the candlesticks are going to confirm this pattern. On Friday, we're able to see the first close below the neckline, which is this candle here. And what I said in my previous videos is that once this neckline is broken and it is confirmed, we typically expect the candlestick, which is the price, to drop an equivalent amount that corresponds to the height of the head. And this is the height of the head that I've identified on the screen here. And this height is equivalent to about 3.24%, and so we expect that from the break of the neckline, you should expect price to drop to this region, to this level, which is around the 521 level. However, what I've also gone ahead to do on the chart is to draw this trend line. This trend line seems to have been a support region where, when price falls, finds support. And now we are approaching that same trend line now. And so what I'm going to call your attention to is this region now. So this is the region we need to keep an eye out for. I'm going to add my moving averages. And now this moving averages are the 50 and the 200 moving averages, exponential moving averages. You can confirm that by going into the settings and looking at which of the averages is activated. You have the 50 and the 100 moving there activated. The 50 is the purple curve and the 100 is the white curve. In my moving averages video, I explained that once the candle, the price closes below the 50 EMA, the chart is bearish. And clearly you can see that the candlestick is clearly below the 50 EMA. It has closed below the 50 EMA. So we are in a bearish environment, meaning the sellers are in charge. That is the meaning of bearish. Now, in addition to this head and shoulder pattern that I identified, I also drew a downward trend here. You can see that it's overarching above this head and shoulder pattern, where we are making a series of lower highs. Can you see that? Can you see that? And also lower lows. Can you see that? Which is a downtrend. Now, also, you can see that the white curve, which represents the 100 moving average, you can see that is acting as some form of support. And that is what these moving averages do. They also act as a form of support. Look here, you can see when price broke through the 50 EMA, it broke past the 100 EMA acted as a form of support for a while, but it still failed, and then price broke through it, and the trend line also kind of acted as a form of support, but that failed, and then we met our final support at this key region where the price reversed and it went up in a bullish nature. Similarly, here you can see that the 100 EMA here also acted as a form of support. So now we are at that point in time again where price is sitting on top of the 100 EMA. Also, price is sitting on top of this trend line that I've drawn from way back. In addition to that, this region, we also have another weekly support at that region. So you can see that within this region here, you have three kind of technical indicators overlapping, and this is what you call a region of confluence. So it's a region of confluence. In trading, support is support until it is proven otherwise. Resistance is resistance until it's proven otherwise. Now we have a region of support here. We also have our 100 EMA, which is also some form of support, and we also have our trend line, which in times past price has bounced off it, all interfacing together here. So guys, it means this region is a very important region for this asset. So going into this week, we want to see if price is going to reverse from this region to back to a bullish or an upward trend. And eventually we also know that once we get some kind of reversal here, the line in the sand is also this downward sloping line, which has acted as resistance starting from early December. So if price bounces off this region of confluence, expect some kind of resistance also at the tip of this line. And so when price approaches this region again, is it going to be able to bounce? Is it able to break out? Or is also going to meet resistance again and continue this series of lower highs and lower lows? So definitely there's a higher chance or a high probability that price is going to bounce off this region. That's what the probability tells us. That's the more probable occurrence or event to occur. However, it's also possible that this conference region fails, and if it fails, definitely we expect price to continue the expected movement to the 520 region. And also if this fails, we expect price to further go down to 500. But probability wise, this is a region of confluence where three key regions or three technical measures converge. So we expect that there should be a bounce in price, a reversal within this region. Will that occur tomorrow? No. We will watch the candle and then make our decision. Remember guys, every new candle is a new information that helps us both probability wise and to make decisions. So we need to see what is going to happen tomorrow, Monday. Is the new candle going to form below this close and close below it, or we are going to have a gap up that negates this head and shoulder pattern and also perhaps this downward slope? So these are what we need to look out for going into the coming week. We can also just add our MACD for extra confirmation about the sentiment in the market. And clearly you can see that the market is actually bearish once the signal line crossed above the level line and the bars on the MACD became red. They became below zero. So this is showing you that there is indeed a bearish momentum in this asset and sellers are in charge of the price action. Let's start with the US large cap stocks tracked by the ETF VOO. The week to date performance stands at negative 2.62%. Year to date, VOO has delivered negative 1.48% compared to the previous year's overall 24.98%. The short term bias on the daily time frame exhibits a bearish trend, while the mid term outlook on the weekly chart is neutral. Moving on to the Nasdaq, represented by the ETF QQQ, this week saw a change of negative 3.21%, bringing its year-to-date performance to negative 1.38% versus last year's annual return of 25.58%. The daily time frame points to a bearish bias in the short term, while the weekly chart indicates a neutral bias in the mid-term. US small cap stocks measured by the performance of VTWO this week posted a decline of negative 3.88%. Year to date, VTWO has delivered a performance of negative 2.59% compared to last year's overall gain of 11.55%. In the short term, the daily time frame is exhibiting a bearish trend and the midterm outlook on the weekly chart is neutral. For Canadian equities represented by the BCN ETF, this week's performance was negative 1.73%. Year to date, VCN has delivered a return of negative 0.51% versus last year's overall gain of 22.16%. The short-term bias on the daily time frame is indicating a bearish trend, while the mid-term outlook on the weekly chart indicates a bullish trend. Switching to Nigerian stocks, tracked by ASI, the week-to-date change is positive 1.80%. Let's go, baby. Year to date, ASI has delivered a return of positive 2.45% versus the previous year's overall performance of 37.65%. Short-term outlook on the daily chart points to a bullish trend, and the mid-term outlook on the weekly chart also indicates a bullish trend. Furthermore, the oil commodity tracked by USO recorded weekly gains of positive 2.82%. Year to date, oil prices have changed positive 4.95% compared to last year's overall gain of 13.35%. The short-term outlook on the daily chart points to a bullish trend, while the mid-term outlook on the weekly chart is neutral. Finally, Bitcoin, tracked by GBTC, recorded a weekly change of negative 4.37%. Year to date, Bitcoin prices have moved by negative 1.80% compared to last year's overall of 113.81%. The short-term outlook on the daily time frame is neutral, while the mid-term outlook on the weekly chart exhibits a bullish trend. Where may the opportunity lies? This time last week, I pointed my audience to some potential opportunities that might lie in the oil sector, and I identified a potential ETF called USO that might offer us some profitable returns in the short to mid-term. Let's have a look at how that asset has performed since I gave that hint. So we type USO on the chart and we focus on the weekly time frame because this is a short to mid-term trade position. Now, clearly, what I've identified on this chart here are the key regions. So the white horizontal line are the regions that are identified on the monthly time frame, and also these regions here that are more, pronounced in terms of width. Now, you can clearly see that price has been trading, has found support within this region here, and this horizontal line here has acted as resistance. And also this structure that I've also identified here, which looks like a pennant, I've also identified this structure where that's acted as resistance for the price action dating back as far as March 2019. Clearly, let's add the MACD, the moving average convergence divergence indicator on the chart to get the signal that we can see from here. Clearly, you can see that the level line is above the signal line, which is a bullish signal. And also you can clearly see that the height of the bar, which represents the divergence, that means the spread between the level and the signal line, has been increasing, which shows more buyers are stepping into this asset. Now, let's also add on chart some of our moving averages. And since I'm on the weekly time frame, I'm going to specifically look at the 10-week and the 20-week EMA. And clearly, you can also see that the faster reacting EMA, which is the 10 EMA, crossed above the 20 EMA. So that is telling you the price in the last 10 weeks is higher than the price in the last 20 weeks, which is bullish, which is a bullish signal. Now, based on last week's call, if you had invested in this asset, you'll have had a return of 3.49% in the previous week. You can clearly see that the price of this asset opened in the week at $78.43 and it closed at $80.64. That is a return of 3.49% and a return of $2.72 for every share invested in. Now, is that the end? That's a very good question to ask. Now, if we look at the chart now, you can clearly see that this asset, this price action, seems to have broken out from this structure that I've identified as acted as resistance dating back as March 2019. You can clearly see that the price has broken out of it. Now, it has broken out of it, but it is not yet confirmed because this can be a fake out. Also, you can see that while buyers brought this price out of this structure, it still met resistance at this key region. Remember, guys, that is the purpose of all these regions that we draw: support, resistance. I said earlier, and I'll say it again: resistance region is resistance until proven otherwise. What that means is that when reaches that level, you expect price to either reverse or pause. Pause meaning to stall. So clearly, now that price attempted to break out, you see, acted as resistance and sent the price back down, and so the price closed here last week. So what we expect going into this week, we want to see that another candle opens above this structure and closes above the structure. Then we are confident that this structure, that the price has broken out of this bearish downtrend. Now we want to also see what's going to happen at this key region, because we know this is resistance, so we expect price might either pause when it reaches this key region for some few days before it eventually breaks out, or price might actually reverse and also find support. So this that was previously resistance might become support and price will continue to rally up. Or possibly, you know, tomorrow price might even gap up and open above this key region to continue with its fresh rally. So these are the three situations that might play out. To repeat, price might either open above this structure and close above this structure next week. Price may meet resistance here, shop around here for some few days before eventually breaking out with volume. So you also need to use the volume to confirm that it's a valid breakout, or price might actually gap up from here and open above this key region next week to sustain this continued rally. And so this is my interpretation of what might play out on the asset USO in the next 1 to 2 or 3 weeks. Let's wrap up this week's market summary. Looking across the markets this past week, the sentiment reveals a cautious tone. US indices are all facing bearish pressures in the short term, with neutral mid-term prospects. The Nigerian market, however, stands out with bullish sentiment in both the short and mid-term, while oil is gaining short-term momentum. Bitcoin's mid-term outlook remains optimistic, even as short-term sentiment holds neutral. Remember, markets are constantly evolving, so staying informed and adaptable is crucial. Thanks for tuning in, and don't forget to like, subscribe, and share your insights in the comments. See you next time. Until then, trade wisely and stay informed.